All right, today we're going to unpack the latest financial report from the mining giant Freeport-McMoRan. And it's quite a story. We're talking record-breaking prices for metals, an unexpected tragedy, and a really complex financial picture that tells you a lot about the resource industry right now.
So, to really get what happened to Freeport, you have to start with the price of copper. I mean, prices have been on an absolute tear, hitting all-time highs in 2025. For a copper producer, these should be the best days of your life, right? But for Freeport, this incredible boom was completely overshadowed by a truly devastating event at their biggest mine.
So before we dive into the incident itself, let's get to know the main character in this story. Freeport-McMoRan, or FCX as they're known. They are a true heavyweight in the global mining world. Look, these guys are based out of Phoenix, Arizona, and their entire goal, in their own words, is to be foremost in copper. They aren't just another company in this space. They are one of the biggest publicly traded copper producers on the entire planet. And their power, it comes from this incredible portfolio of assets. We're talking about massive, long-lasting mines spread all over the globe, from the Grasberg district in Indonesia, which is one of the world's largest copper and gold deposits, to huge operations in Arizona and Peru. And remember that geographic diversity. It's going to become a really critical part of our story later on. But in the third quarter of 2025, the company's whole trajectory was just violently thrown off course, and not by the market, but by a catastrophic event at their flagship Grasberg mine over in Indonesia. On September 8th, the mine was hit by something called a mud rush. You can just imagine it, a sudden underground landslide of wet earth and rock. In its own report, the company calls the event unprecedented. They'd never seen anything like it in their decades of mining there, which just tells you how sudden and completely unexpected this was. And the immediate impact was just heartbreakingly human. 7 team members were fatally injured in the incident. The sheer scale of this event is just staggering. We're talking about approximately 800,000 metric tons of wet material that just suddenly flooded into the underground mine, rushing through multiple levels and just overwhelming everything in its path. In their official analysis, you can really feel the weight of this. The company's management stated, "The entire FSCX organization is grieving the loss of our 7 team members," and they went on to reaffirm that safety has to be the top priority above all else. The response on the ground was, as you'd expect, immediate. This timeline shows you exactly what happened. On September 8th, all mining operations were suspended to focus on recovery. Those efforts were tragically completed on October 5th. It wasn't until late October that any work could restart. And even then, it was only in the parts of the massive mine complex that weren't affected.
Now, while the human cost is just immeasurable, a public company like this also has to quantify the operational and financial impact for its shareholders. So, how do you even begin to put a number on a disaster of this scale?
Well, the impact on production is laid bare right here in these numbers. If you look at just their Indonesian operations and compare them to the same time last year, you see a total collapse. Copper production, down 29%. Gold production, down a massive 38%. That is the direct, quantifiable result of that mine shutdown.
And looking ahead, the company is very upfront about the challenge, saying they expect a significant financial hit for the rest of 2025 and well into 2026. So what's their primary response? Insurance. Their report confirms they're trying to recover losses under their policies, which, and this is crucial, cover up to $1 billion. That's a huge buffer against this kind of operational halt.
But here's the thing. The Grasberg incident didn't happen in a vacuum. To really understand the full story, we have to zoom out and look at the bigger picture. Because while one part of the company was deep in crisis, other, very powerful forces were at play. And this is where the story gets really fascinating. You've got this wild contrast. On one hand, a major mine is completely out of commission. On the other hand, the global prices for their 2 main products, copper and gold, are skyrocketing to record highs. This created a powerful, if totally unexpected, financial safety net for them. And, this demand for copper isn't just random. It's being fueled by huge global trends. We're talking about everything from electric vehicles and renewable power grids for the green transition to the explosion in data centers and renewed defense spending. All of it needs massive amounts of copper, and that's pushing the price higher and higher. And this chart just brilliantly illustrates the surprising result of all this. Despite the tragedy and the production halt in Indonesia, the company's overall net income for the first 9 months of the year actually went up from $1.6 billion to $1.8 billion. So how's that even possible? Well, remember that geographic diversity. Their operations in the US and South America were humming along, cashing in on those high copper prices, and they more than made up for the shortfall from Indonesia. So after a quarter that was defined by such incredible extremes of tragedy and good fortune, what does the path forward actually look like for Freeport-McMoRan and the Grasberg mine? The report lays out a very clear, methodical, three-step plan for recovery. Step 1, a complete investigation, bringing in outside experts to figure out the root cause. Step 2, a full damage assessment of the mine's infrastructure, which they want to have done by the end of the year. And finally, Step 3, a careful, phased restart of the affected mine, which they hope to begin sometime in 2026. And that brings us to the final, critical question that this whole story really poses, and it isn't just for Freeport, it's for the entire industry. The world is demanding more copper and other critical metals than ever before to power this green transition. This report is a stark reminder of the immense physical risks and the profound human responsibilities that come with meeting that demand. So the fundamental question is, how do you balance that global boom with the absolute, non-negotiable priority of keeping your workers safe?